Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views.
Hey, good morning. Welcome to Thursday, the 5th of Jan, 2023. I want to talk about Fed minutes, and I want to talk about a commodity here. So Fed minutes came out yesterday. Went largely ignored by the market. I've got a chart of the dollar up here. After the minutes came out, I don't know if you were paying attention, but the Federal Reserve was talking about, they didn't like the fact that monetary conditions seemed like they were loosening. Market's been, a little more favorable. Interest rates have come down. So this loosening condition in monetary policy, they're not a big fan of. And at the end of the day, the inflation situation in terms of what's being led by services, wage inflation, tight labor market, all that stuff, potentially could lead to a tighter and, longer staying Federal Reserve with regard to tight monetary conditions. So that was the tone, that was the message that I took. But the market has been really trying to look past that message, and the bond market has really been trying to call the bluff or look through the Fed. This morning we got ADP out, came in stronger than expected with job additions pretty firm. Now the market seems like it's paying more attention. Tight labor and wage increases are definitely the issue. Again, it leads to continued strength on the services side, which I think is the real stubborn component of this inflation, right? The goods part seems like it's coming down, but the services component still holding in pretty strong. And all the elements that you might have thought you'd see yesterday after the Fed minutes in the market, you're seeing today in terms of stronger dollar, weaker stocks. For now, you got an S&P down almost 60 bips pre-market. And commodities in general, though I think crude's gone down a little bit now, but crude natural gas is on its ass again. So the only one that's a little puzzling, and I want to talk about it real quick, copper. So why is copper, you see the lift off the low here, for those of you on just the audio version, we're looking at the chart of COPX ETF for the copper miners. Really good move off the lows back from October. Copper actually never broke down to a new low after the July low, for what that's worth. And now you've got some consolidation happening up here, and copper's having a good move today, up 2% in the futures, and you've got the 50-day moving average one coming up through the 200. So you could have the old golden cross happening here, technically. It's interesting, and I put out to those who receive our newsletter, the financial professionals on our list, we put out a piece yesterday that talked briefly about the dynamics in place for stronger copper in terms of the supply side, in terms of inventories and what that looks like. So normally we'd be totally avoiding copper at this point in the economic cycle. I think it's too early. But because of what's going on and the dynamics I just talked about and we illustrated yesterday, it's interesting. We do have a position. We're just going to hold on to it for now and see how it acts. But with China reopening, again, inventory is low. Maybe the U.S. isn't going to go into a total collapse. All that would bode well. So that's it. Have an awesome Wednesday, and we'll talk to you guys tomorrow.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the Ignition model. The Ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The Ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.